Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Oh, wait. I need to get the music ready here. There we go. 2024. 2023 was real short, I feel like. Wow. Markets, can often be a turning point for markets, and I am seeing some pretty big shifts today. Not a whole lot happened while we were on the break, but today things are starting to get interesting. Let's go take a look at the charts and let me show you what I'm seeing. So if you see over here in the treasuries, we have finally seen a possible momentum flip. Of course, there's like this whole area down here that we would need to get through first. There probably is going to be a little bit of support here, but if we start breaking to the downside, we might finally see all of the CTAs and momentum strategies flip around, going short or at least closing their positions. So we got to keep an eye out for that. But over here in the S&P 500, it's looking a little ugly. I mean, there was some sell-off on the 29th, but man, that's really ugly. And after such a gentle little rally into the end of the year before, so we have some markets kind of turning risk off, but it's interesting that we got interest rates and equities going the same direction this morning, right? That's kind of the big change here. Oil maybe a little buoyed. I mean, we're heading on the upside. There is still some conflict in the Red Sea. So far, that hasn't really affected oil too much. And I think that's largely because the oil that comes, at least into Western nations, doesn't really come through that area. It's really more Chinese imports. So we got gold and silver just kind of trudging along there. Kappa maybe turning back to the downside. And we're looking at currencies, the Japanese yen up top, the dollar down below, and we are seeing a little bit of flight to safety into the dollar as the interest rates go up here. And then Bitcoin. Rumors on Bitcoin is that they could announce an ETF as early as today. Now, again, when this all first started, I was like, there's no way they're going to approve an ETF. Apparently somebody pulled strings, because every information that we're getting is that it is like imminent. And I would not get in the way of that one, okay? Let me tell you something. And I've kind of, this is one of those things I've been arguing with people on Reddit about, but there's a lot of people that seem to think that, it's already priced in. It will be a sell the news event. It may well be that day. It may well be that day that Bitcoin takes a big jump and then dives. But after that, I would not stand in the way of that, because there's probably going to be some money coming into it. And the price has been manipulated anyways. So maybe ETFs ends up being a good thing in the long run if it kind of starts to hold Bitcoin to some sort of actual real correlation with things and real flows. So we'll see. All right. Anyways, for the time being, the flows have been pretty non-consequential here in the treasuries. It is sell. It is a sell, but not really going. And I need to update some of my DOMs here. So we need to go to what? It's H24. Oh, no. F24. F24. Well, when I do F24, I'm not getting... Oh, okay, now I'm getting something. I was like, 30 January 2024. Okay. And oil should be on February, so that should be on G. CLG 24 February. All right. Well, for some reason, I'm not seeing anything over here in the 2-year. So over here in the 10-year, you know, I'd still be eyeing 4%, but still quite a long ways. We're still a good 4 basis points away from that. And there was a pretty strong uptick there in the treasuries too. So I gotta apologize in advance. I'm probably gonna be blowing my nose a lot today because I've been sick over the whole break. I don't think I got to enjoy the break as much as I would like. I think I'm getting better, but like I got this thing where it's like it's up in your head for the first like hour or so of your day, and then eventually all the water that you drink and everything, you know, hydrates you enough that the snot starts coming out. It's gonna come. See, you just wait. You can kind of tell in my voice, can't you? Wow, only 15% of Israelis want Netanyahu to keep his job after the Gaza war poll finds. That is brutal. 15%, man. I could probably find 15% of Americans that approve of Congress. You know, like that's low. Well, ZB turned up a little bit there. Wondering we getting something in the curve? Yeah, there's a little bit of flattening today. I have to keep an eye on the curve here. Okay, now I can see the 2. Yeah, you see the 30 came back there quite a bit compared to the others. That was an actionable trade in the 30. The Wall Street Journal says many investors believe that a return to economic normalcy could translate into a sustainable rise in stocks. Okay. Okay. So like I said, there appears to be, I don't know if that was enough. Just like looking at my volume, there was enough to turn the volume around in ZF in the 5-year, but not the other ones. But you know, maybe some tepid signs of support at 04. Like they do seem to be pushing back against it, like actively pushing back against it. No, that was the most pathetic cough ever. That was like a turn your head and cough. Good grief. I'm gonna try blowing my nose here. by the way, I didn't say anything, but man, you guys don't miss a beat, right? GWE, Tactical, Tenacity, Dom. First trading day of the year. Here, right as the stream starts. Right back to our usual numbers that we almost always have. We have the most dedicated group of traders here in this channel. It's really something else. They are maybe starting to turn like outright into a bull. Well, okay, I guess 10-year would need to get above 09 before I would get too excited about anything, but there's a massive drop in the ass. It's a 1% drop in NQ. So not massive, but it's pretty big. It's pretty big. By the way, it looks like chat has changed. Does it like... Yeah. I think that they like added reactions. So now you can click like the little heart button in the chat. And you can just like click it all day. So if you're bored, you're afraid that, you know, you're going to overtrade. There you go. Yeah, just come over here and click that heart button. Wait, so do the different ones make different oh man. Now you guys all start clicking it like crazy. Do the different ones, oh that's a little disappointing. They do like you just see the icon when you push the different ones. It's not as cool as the heart, I don't think, but hey, that's cool. I wonder how YouTube uses that. Like, does it see everybody clicking on it and go like, oh, this is like a really popular stream, we should send, or is it just like an audience engagement thing? What else? Do we have anything new over here? No, not the poll. How about we do this? Start a poll. Man, what would be a more interesting question for the year? Because the market pretty largely expects interest rates to come down. So I don't know if that would be a very interesting question for us to answer. And, you know, if we were to look at the S&P 500, we'd have to say higher, probably. But then the question is, like, how much higher? 6,000? That'd be amazing if we got to 6,000 this year. How about Bitcoin? Bitcoin into year. I know I don't care about Bitcoin, but, you know how it is. I'm going to have one is going to be below 50K. Oh, I gotta put dollar signs on all these. Yes, could fall to 46.80. 100-point drop? Sure. Yeah, short term. So, like, the thing that I'm looking at, I don't know. So, I gotta be careful because I'm going to over extrapolate things. Okay, so like momentum strategies have been really powerful as of late, especially here in the treasury markets. I've been reading a lot about momentum strategies over the break, so I'm going to be looking at like the momentum stuff a little bit more than maybe I should, right? But when I come over here and I look at it, I mean, you can see it on like these intraday charts, but like, let's look at it from the treasuries point of view, right? I think it's so classic that you come above the moving average and then flip back down around. And you kind of, the way that a lot of these work is they'll say like, are we making a new 20-day high or a 20-day low or something like that? So if you start getting below like this area or so, right? Momentum starts to flip. And then you get a bunch of people going short. Or at the very least, mean reversion is coming in, right? The very least mean reversion is coming in. Then you come over here and you look at the treasuries the equities, and man, then you really see it. And yeah, that area that you're talking about, 4680, is kind of down in, 4680 is down around here. Okay. But there's kind of this support area around, let's say, 4750. So here again, maybe some mean reversion is taking place. But if all of a sudden they were to, say, break below 4750, I think you could probably see a lot of that momentum flip. It's kind of funny when you look at the chart and you just look at the year, right? All of a sudden you realize that like all of the gains from the year basically came from November on. Isn't that wild? Oh man. What a roller coaster it has been. You missed a drum. Well, it's really that week between Christmas and New Year's tends to be the lowest liquidity. So like even if you're around and it starts trending, those are really hard to jump on. Those are really hard to trade. I always just take it off. I find that I get way more out of all of the study that I do during that time than I do running the stream during the holidays when everybody's gone. So I wouldn't stress it. One of the things that I have a hard time with is seeing the market go without me. You notice that sometimes, there will be a good breakout and I sat on my hands and then I'm like just grumpy the rest of the session. I really hate that. But the thing that I always got to run back down through my mind is that the market goes forever and there will always be other opportunities. And yeah, there will be other opportunities. Yeah. Now I've spent a lot of time thinking about where we want to go from here with the channel and our strategies and all of that. And I just have not come to a conclusion yet. I've spent a lot of time working on CTA style strategies. I think there's a lot of cool work we could do there. I think that what I'm seeing from the CTA strategies takes much better advantage of some of the skills and knowledge we have around the back testing. I've been able to make some back tests. I think the one that I was showing you guys before the break is a little overfitted. But I think that we can find some more interesting stuff on like daily timeframes. Did you do your test? Well, so I spent the whole break studying pretty hardcore, and I did schedule it. But it's not until the end of the month. I pretty much took all the tests. Oh my gosh. So yesterday I did one. I did test 5. There's six practice tests. I did test 5 yesterday. And I was so mad at myself because there's this so one mistake I keep making. A lot of the questions on the series 3 are like, there's this guy and he bought when the futures were this and he took it off when the futures were this, and this is what the cash price was when he took it off. So when you factor in what he made or lost on his hedge, what was the actual final price that he got, right? And I will always make this mistake where it's like, I will mix up, were they a producer or a buyer? Is the question asking what price did they get, or what price did they have to pay, and the difference between that as to whether that hedge helped or hurt them and raised or lowered the price or whatever. And it freaking gets me every time. I don't know why, but I made that mistake like 3-4 times in a row. So I thought I was doing terrible. And then I still smashed the test. I still got 82%. So my goal is to get a 90. Of course, it's kind of a stupid goal because they don't tell you what you got with these tests. Otherwise, you could like try and figure out what all the answers were and like sell it to other people and stuff like that. But the new Jigsaw update, you mean the one from like 3 weeks ago? That gives us new columns and stuff like that. We do have it, but you know, I personally did not find the new features terribly interesting, terribly helpful to me. I can see where they're useful for maybe other markets. So this is the other thing. I've been reading a lot about the momentum. So I did something that's trying to do momentum on a single stock. I got it to be okay, but what I'm finding is that these strategies are very much dependent on having a large universe of futures to trade, and that's where a lot of it is coming. If you go in and you do a single instrument, you can have it go sideways for years and years and years, and do just absolutely terrible. And the drawdown that you can get on it can be terrible too. It's only when you add like a wide variety of instruments that have low correlations to each other that, you know, it starts to give you a good Sharpe ratio and all of this sort of stuff, right? So I've been wondering, okay, do we do that on NinjaTrader? Or is this something where Python will really, really help me and I should switch those over to using Python? And I'm kind of leaning towards trying to do it in Python, but we'll see. Look at the frameworks and the data that's available to me. And then the other question that I have is, okay, so if we try to run one of these, like really run one of these, like make a company and let people invest in it and manage other people's money sort of thing, would it be enough to do it as a commodities pool, or would I want to go the managed futures route? Because if I want to do the managed futures route, I think that there's another test I have to take, because there's the Series 31, and I don't think that the Series 3 replaces Series 31. And it was a little frustrating because the materials that I have weren't very clear about that sort of thing. Okay, well, the treasuries, when they bounced back there, they came back pretty hard. So far, they're looking like that was just like a pullback, mean reversion sort of a trade. They haven't really pushed too hard on the upside here. Could happen. We could maybe see some, you know, push up to, well, there's a big order up there at 11.5. Pretty thick liquidity below us though. That makes a difficult call for us. You know, sometimes at the beginning of the year, you'll get like really clear, strong trends, and we have had pretty clear overnight action. But the liquidity and everything tends to be a little bit more iffy at the beginning of the year up until the first non-farms report. So Friday, might... By the way, on the Bitcoin end of your poll that we got going here, I'm surprised. Tied at below 50K and above 75K. Because the crypto fiends, if we want to call them that, they all think 100K by end of year. It's be interesting. That's probably, I don't want anything to do with Bitcoin like right now, to be honest. I don't want to make it a large part of my content or anything like that. But it is kind of like the most interesting thing going on right now. Not when I say right now, I don't mean like within the intraday action, but like, this week, probably the biggest story is going to be whether or not they approve a Bitcoin ETF. And it really sounds like they're going to, so. Well, I'm gonna browse around. I'm not liking this kind of action right here in ZN, so let's browse around, see if we got anything. I tell you what, I was starting to get a little bored during the break, like with the internet. What happens if it gets approved? My bet is you might see a short-term top like that day, but that the longer, like daily, weekly trend will continue to be up. Because what will happen once the ETF comes in is that then there will be a bunch of institutional investors that didn't want to get involved in it before that might allocate a little bit to it. And that will probably cause a rise in Bitcoin, yes. As much as I hate to say it. So I was arguing with somebody about this the other day because I was saying, if more money is coming in, it's probably going to make the price of it move up. There are a lot, because it's the orders, and you can't really price this sort of a thing in. I think these people that are saying it's priced in are probably going to have egg on their faces. When he was saying, well, like, that can't be right because, can a stock being added to the index be priced in? Well, I would argue no. Like, if you own a stock before it gets added to the index, you're almost certainly to make a profit. You're almost certainly. And that is like the announcement. When the announcement happens, there's going to be a jump. And then probably between the announcement and when it actually gets added to the index, you're going to see that stock rise, generally speaking. But this guy wasn't buying it. So that's kind of like, so the first question is, does it get approved or not? Pretty much everybody in the market expects now at this point that it will get approved. So then the question is what happens after it gets approved. And I'm saying this is one of those things that you can't actually price because it doesn't matter what you price. The orders are going to come. And with the way that the Bitcoin market works and how illiquid it is and everything, there's not a lot of supply out there. Yeah, this is probably going to move it up. The question is just how far do they get? How much money actually comes in? I don't think that there's going to be as much money coming in from an ETF as the Bitcoin proponents want. Like, they want to be $1 million by the end of the year. That's probably not going to happen. 100K could happen, but I think that that's like a big question mark. Might not be enough to get them to 100K. They might hardcore fail that. So it's kind of Russian media urges Putin to attack British warship. Good grief. So here's, if we're going to go into like predictions for 2024, here's my prediction for 2024. The current trajectory that the market has mapped out for the year where interest rates get reduced a ton and equities are buoyed by that. I don't think it's going to play out like that. I don't know how it's going to play out, but I don't think it's going to play out like that. I think that it's going to be very confusing. I think that there's going to be things, and you know, it's kind of funny because there's a bunch of things going on right now. You still got the thing in Russia. Will the US just completely give up on that thing? Saw an article this morning where they were saying, you know, America basically thinks the war is over. I think they have a fair point, which is that Americans don't expect to be putting a whole lot into it because it seems like that the lines have solidified and that there's not a whole lot of point in trying to do much else unless, you know, somebody else is going to get involved. Right? So there's that. And then we've got this flare up in the Red Sea. So over the weekend, this time, the Houthis attacked a container ship and U.S. helicopters got involved. And now Iran's got a warship in that area. So that could just explode, you know. And that could go off. China's not too happy with what's going on in Myanmar. They really want access to a port there, and that whole like takeover in the government there like really upset things for them. So they, you know, it's possible they get involved in Myanmar at some point. Like there's the whole Israel situation. Like there's just a lot of stuff that could flare up, and all of the elites, all of the people in the news media and everything are talking like, you know, some surprise event for the election is going to happen. Yeah, I don't believe the conspiracy theory cynical kind of approach to it, but I do think that the path that the market has mapped out seems a little unrealistic. They come back down and across. You know, it's kind of funny. All it takes is like 4 ticks. Now we're eyeing lows again. Seeing flows in ZB look slightly tilted to the downside, so, and there you go, there's another tick. Well, I'm liking that a little bit better. I kind of feel like it might already be a little bit too late. But below 04 could maybe start to get a little more interesting. I was hoping for 965, but you seen Wemby? No. Was that a movie that came out recently? That sounds familiar. You know, usually I'll go and see a movie over the holiday, but I didn't. The kids went and saw Wonka, and they liked it. But they seem to like anything that's a musical. It's the NBA. Oh, okay. 2 days ago. Well, it's not that great. It's not that great. Oh, while I'm over here, I see a new comment on my, is order flow the only way to be a profitable trader? No. But I have a hard time seeing you be profitable on short time frames without order flow. Consistently. Well, they had a good uptick and now it's back down. And they're just kind of chilling here. So this is why I'm a little bit like hesitant. You know, they're a little bit too comfortable there. So you got to be careful about like hitting into it, getting a bad price. Because, you know, like if I get 965, that's kind of like the middle of this. If it doesn't go and they find support, you can be, yuck. Anyways, that dunk, it was kind of funny, but it was like an uncontested dunk, so it's not that great. I don't watch basketball. You know, I used to watch a lot of basketball, man. I used to watch a lot of basketball, but not anymore. Part of that is that my team sucks, so. Okay, so they're starting to hit into 04 and iceberg and uptick. So, you know, I kind of feel like I favor the shorts. I think that's maybe because of a long-term bias. But I don't want to fight with that at 04. I suppose I could wait, you know, if they bust through it the other way. Yeah, of course, there's another uptick. So... I guess if I really want the short, I could wait for them to come all the way back up here to the top and I could maybe get it lower. But there's probably going to be a lot of price action traders going, oh, double bottom. Interestingly enough, the ZB pushed new highs there, despite the volume still being sell. I'm actually getting a lot of movement here. Seth, you don't by any chance have an Apex affiliate link? I do not. I used to, but I don't. I decided that I didn't really want to support the combines. Try to be very careful about. Yeah, I try to be really careful about like what kind of affiliate links sort of stuff we do. So I tend not to put something as an affiliate link, at least not in every video, unless it's something that I'm actively using, you know. So one of the things I was working on over the break was a video script for reviewing this chair. I went and I wrote the script and I was kind of like, I don't know if I really got that great of a video here. Like, am I really providing value that's not in other videos? Maybe I'm overthinking it and I just need to make the video and put it out and, you know, does what it does. But, you know, I could probably get like an Amazon link for the chair. I really like the chair. You know? Oh yeah, I'm willing to support it. It's just like, I'm kind of meh like that with everything these days, though. Okay, well, they backed off a little bit. So, I don't know about this one. I'm kind of getting this feeling like, despite that pullback, that they could go back down for it again, but I really don't like the look of it in the 30 year. So, if I'm going to take a trade, right, because there's a difference in duration between ZN and 10Y, because this is actually more like a 7 year, this 10 year often behaves a little bit more like ZB. And if ZB is like at its highs, can it really justify going for it, you know, to turn back down and go for lows like that? Probably not. Probably not a very wise trade. So I think I need to just be hands off. This upswing is still kind of like people reshuffling within the range. So this could just be market makers kind of like, you know, jostling around. So I don't want to make too much of it, but there was a lot of movement there. And also, we're seeing the S&P 500 move down again. So let's see here. Am I missing something? Yield on the 10-year UK gilts on course for the biggest one-day rise since August 11th. ET misses bet deadline on Huawei equipment ban, says the Financial Times. Tesla. In the fourth quarter, we produced 495,000 vehicles and delivered over 484,000. Wow, that's so many. Kind of feel like that some of that movement could maybe have been news driven. The S&P 500 did drop there, but I'm not actually seeing headlines, so looks like Jigsaw has $200 coupons for the New Year sale. Oh, sorry, save over 250. That's probably on like the bigger ones. Only 200 coupons available. You see. Yeah, this is standard discounts on things. Gonna adjust to that new tick. So see now, 3955. If I wanted to go for higher rates, that would be a much better price, right? I think I'm seeing enough of a turn in cumulative delta across these three instruments to ward me off from trying to take a short in the treasuries here. But it's still pretty iffy, so. kind of feel like I'm being a little too ADHD. So some days it'd be like, oh, you have Top Step Trader or Apex affiliate links? I could go off on like a whole 30-minute long thing, but was like, said a little bit about it and then lost interest in it. Okay, so there's a new high in ZB. This to me looks like there's desire to breach 04, but they just did not have what it takes and they're bailing on the trade. No way for me to really know like the intention behind their trades and everything else, but that's kind of the scenario that I'm gaming out in my head right now. That seems to make the most sense for the flows that we're seeing. So I'm not seeing any flows that like really strongly suggest large player getting in one direction or another. I am seeing some movement, you know, just in general. So they're definitely out there lurking. But, you know, when you look at cumulative delta, mostly down through most of the overnight session and all of a sudden a little iffy. Okay, there is something going on. I believe, you know what? I think I should take it. Okay, so the thing that I just saw that really set me off there was that oil took a big hit. So what could be like a piece of news that would be lurking out there that part of the market would get, but that we would not? And the first thing that comes to my mind is geopolitical risk. But if it was some sort of geopolitical risk, like a new story coming out of the Red Sea, you would probably see oil move up, not get killed like that. So I'm not sure that fits, but there's definitely something going on here, and maybe we could maybe jump on board. So I think I'll do a small scalp here with the sim account on the full size. So I think I have a reasonably good chance of getting filled at 08. If this other contract gets filled, I might be able to see if I can get it to ride all the way up to 11. Okay. I'll recenter right there. Okay, ZF still has a ways to go. Okay, so Anthony Curdelli says, does the first trading day of the year set the tone for the year? It definitely could, because performance for any market is based on the close of the last day of the year. How the first day of the year goes sets an important tone for the initial flows in a market. The first day of the year is probably the most important trading day of the year for me when it comes to the technicals. I watch the range of the first day and how it relates to the VWAP for the rest of the year. Trading above or below today's range and VWAP are very important for directional moves going forward. I would generally agree with him. I think that the first trading day, it does very much set the tone. I'm seeing copper take a plunge here too. Is there something, maybe this is China? I'm really curious to know why oil dropped there. The S&P 500 kind of did a V-shaped bottom thing really briefly there. So we may yet get 08, but for the time being, I'm seeing a bit of congestion here. Yeah, right back up there pretty easily, in fact. And good bid, good bid. I think we can probably get filled here now. Oh, come on. Maybe not. Maybe he needs to do it again. It's a little better, but no fill yet. I'm gonna move it up. Ooh, 3K. So that would have been my fill right there. There being an iceberg at 08. I guess that shouldn't surprise me, but it did. It wouldn't be unusual to see an iceberg at the higher the low, but I wasn't expecting it. Ooh, and they didn't tick through it. There you go. There you go. Having a hard time holding it, but I think they'll get it eventually. Tariq, oh yeah, it's been a while. How you doing? What's your opinion on order flow algorithms? You ever tried to code one? Did you know any data provider whose data you could code? Well, so pretty much anybody that's giving you level 2 data, you can potentially, code with it. I think the biggest barrier to writing automated algorithms like that is more latency, right? So I think that you would want to have like a co-located server. You can rent those. Co-located server and things. Even then though it'd be tough to compete in that realm. I'm kind of the mind of like I just can't beat the HFTs, and so I need to look just a slightly higher time frame than the HFTs. You know what I mean? The second big kind of thing that makes doing that hard, though, is having quality historical data. So, like, you might have an idea. Okay, I think the market works like this. Okay, but does it actually? How do you prove that? Well, if what you're doing is very much based on level 2, then you're gonna have a problem because you don't get historical level 2, right? There is historical best bid, best offer, but I've found that when you do tick replay, that the difference between like tick replay and live is inconsequential when you're like looking at a chart and cumulative delta and your volume profile and trying to determine, you know, what general direction is the imbalance and all that sort of a thing. But when you're like sitting on a hairpin trigger to go long or short on a ultra high time frame, it's not that 10% is too much, and your back tests just aren't very accurate in that situation. So the data is, and that's kind of why, because I've had some algorithms like that I was very excited about, but I felt that there was a couple of little like weaknesses in them, and I was trying to find ways to filter it a little bit better, but I couldn't really get that to work because the data that I had wasn't accurate enough. So I've been saving data now for probably a year and a half, so I probably have enough data now to kind of try and dive into that more, and I just haven't had quite the time to do it. But basically, I had to resort to saving it myself. And I have an indicator that I put on these things that exports every volume and level 2 message that I receive. Exports it to a file. Okay, a little bit better of a bid there. It's still a little... I think I'll leave it there. Move next to the see me. Well, there's I forget what the name of the website is now. They renamed futures.io for I don't know why, but maybe it was because the well, they still own the domain, so I don't know why they decided to call it Nexus 5, but they have, like, one of the things of being a member is, you know, they have different offers and so forth that you get access to, and one of them is speedy servers. So there are definitely places that are, you know, within reach for a retail trader where you can get co-located. So we could totally do it. At the moment, I think I'm more interested in like swing daily momentum kind of strategies more so than I am high frequency trading strategies. Certainly understand a lot more about the high frequency world though. Do you only trade when you are streaming? For the most part. Something that will happen very frequently is that when we leave the stream, I'm in a trade and I want to let that trade continue to run. I could probably raise it again there, but I'll take the fill on that one. Reason I upped it the first time was just because I had 2 ticks against me, so I figured I might as well get my risk reward a little bit more balanced. Anyways, but that's usually like I'm already in a position, you know? So I know there are some people out there that are like, oh, you know, I was like at absolutely terrible trading during my session and then I made it all back when I was off stream. You know, I mean, I have had that happen before, but I would say that it's quite rare for me to trade outside of the stream. There's another really strong move down in oil. So I mostly keep it to this session. But, you know, we're trying to keep our risk really tight, you know. I look at what we're trying to do here as extremely difficult, if not impossible. So I'm not risking a ton of money on it. I look at it much more as like a hobby and just kind of looking for an opportunity where we have the chance to make a ton from it one time. And do you watch UB as well, or just CP? I do not put a DOM up for UB. So the order flow in UB it's very different from the order flow in the rest of the treasuries, just because it's so illiquid, right? So I personally did not find a whole lot of use of like taking the screen real estate to have UB up. It's the same with the 2-year. Like, a lot of important things happen in the 2-year, but like not enough that I want to have the DOM up on it all the time. So I do have a market analyzer here on my other screen where I'm keeping track of all of the instruments. I do have UB on it there, right? And I have ZT on it. Does this software work for Forex? Kinda, not really. So, there's nothing about NinjaTrader that wouldn't work with Forex, but they're not a Forex broker. And it's basically gotten to the point where if you want to use NinjaTrader, you need to be using NinjaTrader brokerage. But you can trade FX futures. There are currency futures, which should be same difference, roughly speaking. Same difference. I'm not really a huge fan of trading currencies intraday, but you notice, like, my big kind of overarching thing is if you don't have an explicit edge that gives you a very high probability of being correct about something, like I know something about the market that isn't factored into the market that not everybody knows, that could potentially predict future orders, you know? If I don't have that, then I don't want to risk my own money. You notice that this trade that I'm in right here in ZN that does appear to be going pretty good, it's a sim trade. It's a sim trade. I did not have the guts to put that on my live account in the micros, because like it's almost purely technical. This trade was almost purely technical. It was just like, well, they don't seem to have the oomph to get through 04, nor do they really seem like they care too much, so it's probably going to revert here. And we could probably get at least a tick and see how far it goes. Maybe we can get just before that big order. So it's very technical of a trade. And that's because I just know that like my probabilities on a trade like that are like a little bit more random than I'm comfortable with putting my own money on the line for. I'm going to put my own money on the line when it's like I'm seeing a news headline or I know something that I really think is going to create an imbalance and I know it's going to come. Right? If you don't have that kind of edge, then your long-term expectancy is 0. You will lose everything that you have in it, right? So I want to trade in places where I can gain that edge. And treasuries is one of the places where you can do that, because there's a lot of information out there about the yield curve and what's going on. There's a lot of, data to look at in terms of the level 2, and it's very easy to read over here. And, it doesn't really move unless there's a good reason to it. Or most of the time, the treasuries don't just move unless there's a good reason for it. Unlike ES, which, is like declined 1%, and who knows why, you know? So that's why I like to trade treasuries. And I avoid places where I feel like it's very difficult to have that edge. In equity indexes, you can find that edge, but it's very sporadic, and there's so much noise that makes it really hard to pull, right? In Forex, the amount of times where you actually have that edge compared to the times when that edge is available out there but you won't know about it is just like way too high. It's just way too high, because there's all these government insiders and people at the banks, they know stuff that you don't. It's really, really hard to be competitive in that game. And my understanding is that, like, if you are trading for a bank, that the Forex desks are the hardest ones. That those are the markets that like just chew people up. So yeah, I'm not a huge fan of Forex for that. Not for intraday trading. Well, you want to like swing it and things like that, then there can be effects in currencies that might be interesting. "30 people watching the stream?" Well, I mean, that's about usual for this time of day, but it's just so cool, I think, that we can disappear for 2 weeks, come back, everybody picks up right where they were. It really tells you something about the way that we run this channel and the things that we've been successful in. We take this seriously. The people that come in and watch this, they're coming in and watching because there is benefit to it to them in their trading. That they're getting informational content that they find beneficial, that can potentially help them predict orders, right? So if they come in and day out. And it also kind of shows we don't have the same kind of turnover that the rest of the industry does. Because I'm able to help you avoid the pitfalls, you know, if you are working hard and you do everything, you know, watch all the videos, read that PDF, do your research, like, you know, back testing things if there's any kind of technical setups you want to use. But then, you know, like reading Zero Hedge, understanding the flows, reading flow reports from like Goldman Sachs, things like that. If you're doing that, you should be able to get to break even and at least be able to keep trading, right? And that's kind of like the primary goal. And so the people that watch my stream do not wash out as quickly. And that's why we get such a consistent audience. But it's just so cool that it's even like on the first day of the year, you guys don't miss a beat. You're all here. But we have an edge which can't be found anywhere else. Seth's rants. Yeah. How delayed is the stream? So I have everything set up to try and make the stream as interactive as possible. So the delay should never be more than 5 seconds. And it's more often going to be more like 2 to 3 seconds. And most of that latency is just the time that it takes for YouTube to re-encode it and send it out to you. So it's pretty live. It's about as live as you can make it. I don't put any kind of intentional delay in it. Maybe I should, but... Well, apparently the market is liking the delivery numbers that Tesla put out that I had mentioned from a tweet earlier, because they're up pretty big this morning. You know, it's funny you mentioned like rants and stuff. I will definitely get on something from time to time, but lately I feel like I care so little about so many things, you know? It's like the further along you get, the less and less I care about things, you know? Like, used to be somebody would argue with me like in a comment or something, and you know, I would keep going until there were no more arguments left, right? But now it's like, this person clearly isn't getting it. He's gonna be the only person reading it. I don't care to enlighten him and just move on. Currently taking a CS course from Harvard on EDX. Oh, that's cool. Well, so let me tell you what, there are lots of resources you can use to learn how to code online, right? So you can absolutely learn how to code on your own. If you're trying to learn on your own, here's 2 things that I would give you that will help you, okay? The first is that the thing that helps you out the most is the experience, okay? So you've got to write stuff. You've got to write lots of stuff. Like, I think that the tendency that people have is, like, they have this one project that they want to do. And so they're learning all of it so that they can do this one project. And that's, like, all they do, right? No. What you got to do is you got to have tons of little things. Like, if you have, you know, like, it's a tutorial and it goes through and you build that tutorial thing, right? Now, immediately after that, you need to go out and make something very similar to it, you know, on your own. You need that experience of, you know, writing the code, it not working, debugging it, figuring out what the problem is, having to expand on that code and finding the pitfalls where your code wasn't very sustainable and that sort of a thing, right? So you've got to write stuff, like find little projects, things that you can do in 1 or 2 days, and code lots of things like that, right? That's a big one. The other thing that I would recommend is try to get into articles and tutorials that talk about data structures and algorithms as much as possible. That's gonna kind of be the thing that kind of gives you a leg up, because a lot of what goes on in the computer world has nothing to do with any of that stuff. It's just like configuration files, getting this piece of software to work the way that it is intended, plugging it in, and that's it, right? Anybody can do that. But to really build that deep understanding of the language and what's going on, you kind of have to get into the algorithmic stuff. And so even though you might not use it a lot, it helps your development a ton. Do you think the Fed actually cuts rates as much as projected this year? I think, yeah, I do not believe the Federal Reserve is going to cut rates 6 times. Will they cut rates in March is the first question. Right now, it's looking pretty likely. But we'll see. Hey, Lucas, how's it going? Oh, it's so close to a fill. Well, I'll tell you what, on this sim trade that I took, so again, I said I didn't take it because I didn't feel like I had a strong enough informational edge to put my money at risk. But in terms of like reading the flow and getting into a good spot and everything, I did really well on that one. It's not over yet though. It's kind of this question now of like, will it continue through or should I be taking the profit right there? I'm actually, you know what? I'm gonna give in and come down. Okay, so that was a fill. Let's see if it busts through 11.5. The way that was playing and making me a little nervous, though. That's a good bid at 10.5. $11 is like a key balancing area for the market maker. So that makes this one a little bit hairy. See what I mean? This chart here. So this is inventory cost basis. When you put the inventory cost basis on the treasury, you're going to find that they bounce off of that blue and orange line pretty closely. So that means that this is a point at where, like, if you're a market maker and you're market making short, the average short market maker's position is there. So that's why that's often a place where it will come up to there and then rebalance, and you can't get through it. So that's why I gotta be careful. Okay, so I would have gotten the fill there. They just traded through it, so I didn't need to bring that in. Still, I think given this situation, a little bit of caution was warranted. S&P 500, first 10 minutes does appear to be a sell. So one of the things that I'm thinking about here is this rise in the treasuries that we've seen actually a part of a larger risk off move? You know, when I look at the deltas, that was a good delta in ZN, right? When I see something like that, I want to have taken a trade. So I took the sim trade. Okay, cool. But you know, it was over there as well. A little bit there in ZB. ZB's, well, it steepened slightly. The yield curve didn't move too much. The big one, though, that can still perplexes me is oil. Freaking oil is still moving. It's still moving big. What's that indicator called? What, the one that draws the lines? It's called the inventory cost basis. So it's a part of my speculatorseth.com NinjaTrader 8 indicator package. It's $100 for lifetime license. You can go and download it for free and try it for 2 weeks. So my news squawk is just pointing out to me that, with the decline in oil, that the reason oil was up on the session was because Iran had dispatched a warship to the Red Sea zone. So this move down in oil is apparently just a retracement of the earlier action. Since you mentioned some market makers, I actually met some market makers in Frankfurt at the stock exchange. One guy was like 60 years old and told me how they used to fight in there back in the days. When it was floor trading and stuff, yeah. I tell you what, though, the market making at stocks is very different from market making in a future. Just because there is so much data that can help you try and value a stock correctly. Whereas in the future, it's a little bit more strict. So like what happens here in like ZN is I can go and say, here's what the federal funds rate is right now and what it is expected to be and what a 10-year should be worth over the lifetime of the 10-year because of that. And then you find the basis difference between the cash and the futures, and you get a pretty narrow range of in which price can stay in, right? And so all of the movement within that ends up being kind of more speculation. Which is to say, we hear a piece of news or we take in a piece of informational content and we buy or sell based off of that, right? Whereas when you're looking at a stock, they're getting constantly reevaluating based on, you know, all of this information. Because you can look at it as like, okay, company has all of these different cash flows and assets. In each one of those different cash flows, we could potentially try and model to see how much are they going to sell of this? How much are they going to sell of this? How does interest rates affect their holdings of this thing? All of that sort of stuff, right? And so you have this like kind of fundamental valuation of things that is constantly in flux, and the amount of data that they put into these models is insane. Okay, like you're talking about stuff where it's thousands of people just to maintain the system that gives you the data. So that's kind of why I think a lot of people left market making in stocks, because it was just too difficult to compete with the specialists. Now you're kind of seeing them come back. Now it seems like what happens is that retail traders can get commissions on stocks that are like practically nil. And so I quite frequently see people where they've made several $100,000 that year on what appears to be scalping stocks. So hey Paul, good morning, welcome to the stream. Okay, so we just got US S&P manufacturing PMI. It was slightly lower than expected, 47.9 versus 48.4, and I am seeing a slight amount of buying in the treasuries because of that, but nothing too crazy. I'm wondering now if that rise was maybe in part due to an expectation that the PMI would be lower than anticipated, so maybe they're just taking their profits. That might be enough to push us to a new high, though, and then it might be game on. Does the S&P 500 not like it, though? One thing that we could see happen is the market shift and say, well, the Federal Reserve is going to reduce rates, but only because the economy is getting super, super weak, and that's bad for stocks. And maybe we eventually do start to see this treasuries higher and stocks lower. Wow, well, that was a good breakout there when they did it. I could have taken that one. I was a little bit too lax about that, because that number was clearly bad. They kind of paused there for a little bit. Okay, now there's a big bid at 13 that makes me awfully suspicious. Okay, well, so the breakout was 11. Seemed to be coming back there, decent amount. So we did make a little bit of a liquidity hole behind us. Could we continue to buy? Well, I think I'd be leaning towards buying now for sure at this point, but I don't know if 11 actually presents itself as an effective enough risk reward. Definitely could have taken a trade in the aftermath of that, though. I should not have been so lackadaisical about that. They gave plenty of time, and I said, well, maybe they're going to break out, but I didn't care if they were going to or not. I totally could have put a bet on that, because I had pretty good instinct about that they could. A little bit of iceberging at 12.5. That might be all the pullback that you get. The problem though is that, like, can you get 9.3 to 9.2? That one might be a little tough. I don't think 9.25 makes sense. Because will you get 9.15? May regret saying that, because it does look like they want to push up again. There's plenty of room on, I mean, the overnight high is like way, way, way up there, so. I guess what that really means is that that long that I had at 11 didn't really need to take it off. You know, it did pull back first before that news, and I didn't really realize that maybe they were rising because of that news. We have construction spending in the top of the hour, and there is a 6 and 3 month bill auction today. Japan holiday? I don't know. see, they might go for it. They look pretty nicely lined up. When I see them all like one tick from the high, like let's set up like that, right? All it's gonna take is strong uptick, and you're probably gonna see another slip up higher. So dollar does kind of look like it's chilling out a little bit. Also, we're still stuck in this issue where it's the 5-year that's leading, so maybe if I wanted to take this trade, I'd have to sell the 2-year here, right? I could mess with that. I do kind of wonder if I started putting orders in there, if they would bring in their spread. There's another new low in oil. It's not low of the session. At 24, then we're at lows of the session. But I mean, it's come down here so quickly. I don't see why it wouldn't be able to bust through that. Was that a new one? Yep, it was. Oh, and there is a 915, so I guess I could have done it. I do wonder. This flow, I mean, the thing was, is when it started, okay? There was that 04 kind of thought that 04 might provide some support, and it did. There was some like active hitting it away from that point, right? But it was still like within this range. It came in there, and then it was kind of like, oh, well, it might break out. It did, and it kind of went sideways, right? Then this other thing started, and I would say it was about 10 minutes before the S&P 500 really got going. So about when oil started coming down, to be honest. And that turned into a really strong trend. So when the market turned risk off, we saw really strong flows come into the treasuries. Now, I would expect that just because of what the trend has been and the momentum strategies and all of this. There's just lots of people buying bonds right now. But you know, it's curious in the context of how it had started out, and then it turned into a big mover. Kind of suggests to me that there's something to this risk off sentiment, that the market does really believe that treasuries are a buy because economic weakness is coming in, but that equity markets are going to have to take a haircut. So it's time to hedge our equity portfolios, I guess. Man, I thought I was getting better with this cold, but I'm getting more green stuff today than ever before. You know what? I'm just realizing that we still got like an hour left. That looks like likely to be another new high. Okay, so we got the housing starts number coming now. Or construction spending. 0.4. So slightly under the expected spot 5. Not much of a reaction to that number though. You know, I'm thinking about this. So the number that we got was the S&P manufacturing PMI. It is the S&P number for starters, and it's the manufacturing number, right? It's been services has been the one that's kind of been hot, and manufacturing has been languishing for a long time. So, we probably let's come in here. We should look at the week ahead. Okay. Yeah. So Wednesday, we get the ISM manufacturing PMI. And then on Friday, we get services PMI. Friday's going to be like bonkers. There's so much, you know, having ISM services PMI and non-farms. Oh, whoops. I guess I screwed that one up. I'm going to try and scratch it. Do we know why volatility increased? No. We are definitely getting some behavior that looks like news potentially. I think that one of the factors probably was people anticipating the PMI number. But in particular, oil just taking this nosedive out of nowhere seems really suspicious to me. I don't know where that came from. Yeah, I don't like that. So I will just take a small loss on that one. Could have been much worse. Yeah, I'm glad I got out of that. I saw some big orders come through oil redistribution. I really don't know. Well, so the only thing that I do know is that oil was up earlier on this session because of headlines about conflict in the Red Sea. But there doesn't appear to be any clear catalyst for it, but it is just like a straight nosedive. And we did see other markets kind of take a similar shift around that time. Not necessarily in correlation, but that just kind of seems like the point at which everybody made their decisions and went for stuff. So I don't know. Is good volatility in bank? Well, I feel that the first day of the year is often a critical point. So, you know, for instance, a lot of these strategies that are like momentum strategies are very much determined by, you know, what the opening price is. Basically, they wait until they get the open, and then they do all of their calculations and decide to make a trade. And then they do it in all of that liquidity that happens at the beginning. So, you know, if these momentum effects that you see, you know, it kind of turns into like if we're new monthly high or whatever the deal is, then they start getting triggered in. So what you see on the first trading day of the month and the first trading day of the year can often be a really key tell about how these guys are all positioned and so forth, right? So to see what is a very clear risk off move come in so strongly today is probably a significant thing. This is definitely something that we have to make note of. Not saying that that's going to accurately predict that the whole rest of the year is going to be bad, but I think it does suggest at the very least that the S&P 500 is going to take a shot at repricing here now that the end of the year's over, to say, yeah, you know what? There's no way that the Federal Reserve cuts interest rates 6 times and the stock market not be in dire straits. So maybe it's time for the stock market to start acting like they're about to go into dire straits. That's what it's doing today. That really grabs a hold of my attention, and that it started with oil is just so curious to me. If there's no headline, and the thing is if there was a headline in oil, I would expect it to drive the price of oil higher. So if oil is coming down this hard, somebody's really got to be making some big bets that the world economy is not going to be very good this year. Yeah, so what I'm seeing right now is kind of more this. So, you know, when we were looking at this, it was like, I could have taken 925, but can I get 915? You could have barely. But you can see that what happens is now we've just got like this big range that's like a huge mess. And it's probably all the way to 11. I bet you that they could probably touch 11 again. That kind of makes this whole zone like a little bit, you know, if you're a big guy, then great. But for us, if we're really trying to minimize our risk and everything, that's not a very good range to get in. So it was hard to sit on my hands through that, but I think I did the right thing. I did try and take a scalp up in here that was a disaster, but I got rid of that pretty quickly, and that was okay. Does seem to be responding to a strengthening of the dollar. Yeah, although the dollar has kind of been mixed, right? Like they like this is when the PMI news came out. It was down, up, and then big down, and now big up. So the dollar is actually still pretty close to where it was, and this range that it's trading here is actually quite narrow. So I don't think it's just the dollar. Let's see here, for the day though, the dollar's up big, right? So there was like, and I guess that's the other thing, is there was risk off sentiment in the overnight session, and now in the regular session, the equity markets seem to be extending it, right? I shouldn't speak too soon though, because we're pretty close to the open in ES, right? By the end of the day, this could completely shift, right? Like this could turn into a buy the dip, crazy bull day in ES, and it's not completely over yet, let's say. Well, there was a fairly decent 2 ticks down there now outside of that range. It might be a little bit too early for them to touch 11 though. Let's see. ZB seems to be trading a very clear liquidity hole around 24 even. So even though like we kind of popped out the bottom there, it's probably going to be a fake breakout. I don't think they're going to be getting back to 11 quite yet. Maybe after 45 minutes. Hey, Brando, how are you doing? Nassim started the year already insulting somebody. So I was reading a thread on Futures.io here, and somebody had posted some. Okay, this was their trade performance summary. So, oh wow. Okay, so they took 263 trades in one day. So when I see a lot of trades like that, I automatically assume that they're probably doing something kind of dangerous. But their risk reward is actually good. Their average winning trade is larger than their largest winning trade, and their largest winning trade is larger than their largest losing trade. So that's all cool. It is like mostly all on one side. But I'm looking at the Sharpe ratio that it lists there, and that can't be right. Look, see that his total net profit was 32,000, but his max drawdown was 36. There is no way you get a Sharpe ratio of 40 from that. So what has he done to NinjaTrader to convince it to give you a Sharpe ratio of 40? That's just an complete lie. That screenshot does not compute. How is he doing that? I don't know. Maybe it might be a modified screenshot. Let's see here. What was this guy saying? Why was this guy posting it? I don't know what it was. The guy that posted that wasn't very clear about if he thought that if this was his own results or if this was a particular influencer that they were suspecting or something. But that number was just BS. Photoshopped, probably. Yeah, it could be. Would be a total shock if we find out someone is faking trading results online. Yeah. Well, you know what? You know what Mark Twain said, right? There's lies, there's things people say on the internet, and there's backtests. There are Instagram filters, yes, that turn you into a dog. Yes, I've seen that. Like the thing that I don't get, if I was trying to go out and scam people, it would be more than easy to just make something with a lot of parameters and then overfit it, right? And show really great results from overfitting that, you know, I wouldn't need to go through all of the work of photoshopping it. I guess that's more work than photoshopping it, but it would be a more deceptive fraud if that's what you were trying to do, right? Because people would be able, you could give it to them. You could say, look, here's here's the strategy and here's the parameters that you put into it. And as long as they don't know about overfitting, you know, they would do it, verify it, and think that it's totally legit, right? So when you see somebody that is trying to pull a fraud by like photoshopping the image in a way that you can tell that it's photoshopped because the numbers don't match up and stuff like that, right? It kind of tells you something about the caliber of person you're dealing with, right? It's a scammer, but is not a very bright one. Overfitting is, I think even the best traders fall victim to overfitting. Did they touch 11? Not quite. I think things get a little bit more interesting from here in the treasuries. I don't know, it's only been 18 minutes, so we've still got 40 minutes to see what happens, but I'd be very curious to see if the buying persists throughout the day and we actually end the day higher, or if this was like a temporary aberration from the news and everything and it comes back, right? I think that would tell you a lot about what is actually going on today, right? If it comes all the way back, then what we saw today was probably more to do with the PMIs and all that. Oh, right. I'm not talking about educators or people who sell stuff, so that aside, I believe they truly think their strategy works, but how do you convince others while you massage their numbers? I don't know. Like, the thing that I keep coming back to, recently at least, is there are a lot of strategies out there that we know are profitable. And, you know, the one that I've been studying recently is momentum. So the momentum is like the turtle traders, right? They take a universe of stocks. They have a very simple setup. Could be like new 50-day high low. Could be based on a moving average. Could be like way more complicated than that. But you get these entry rules to say when momentum is present in a stock and get long or short it, right? And then you have a universe of stocks that you're doing this across. And that's kind of like the key edge is doing it across a variety of markets, because this market might not be in that state. This market might be flat for years and years and years. But there's always at least one market where the money is going. And, you know, not only that, but then you can work out your sizing rules and how much risk you're taking on and everything else like that, and how correlated your instruments are. And that's where you can really start to get like good results, a good Sharpe ratio. Okay. Well, that's all run on a daily basis. I try and apply those concepts to an intraday basis, and from all of the research that I've done, they're just completely ineffective on intraday basis. All of, like, almost anything that you do from a technical perspective is just like completely ineffective on an intraday basis. And so when you're getting into the realm of high frequency trading, it is more order flow, which is number one, is hard for us to backtest, but then number two is like hyper competitive. So it's kind of like, well, we're just not competitive against HFTs. That's just the long and short of it, is you're not fast enough to get in the queue. It's not even worth trying to compete with them on strategies that have to deal with the speed. You're going to have to find a more sophisticated edge that, you know, gives you a good probability of winning that the robots don't have. And it seems like, especially in a developed market, that it's very, very difficult to find that. So what do? Well, you move up higher time frame, I think. You move up higher time frame. You know? But, so why was I saying all of that in relation to this, you know, these backtest results and things like that? Well, I think that any, like, a good backtest that you could do on an intraday strategy is not going to look good to a retail trader. Like what is actually a really good strategy for scalping, like systematic scalping strategy, they're so hard to get that the results that you're getting off of them are actually very lackluster. So, you know, anybody that's actually like giving you something that's legit and would actually make you money, the retail trader is likely to dismiss because it's not impressive enough. And what is impressive to them ends up being things that somebody's either just outright lying to them or they're doing something super, super dangerous, right? And so the retail traders always get attracted to the things that hurt them the most, essentially. This is what it seems to me. Because if all retail traders we're taking these things that they're trying to use, but they, instead of day trading with them, they were trying to trade them on daily bars across a wide variety of assets, like a momentum strategy, then it would be a different thing. Now, you don't see that really because those strategies, you kind of have to have a big wad for them to make sense. Like a lot of these momentum strategies don't really work until you've got like a few $1 million under management. So, you know? But then to Lucas's point, the other issue that you get is that people just don't understand what it actually takes to like really verify a strategy. And so people will, you know, there are definitely some educators out there that like they tried trading something, they made money for a month, and then ever after that they were the expert, right? That one really bothers me because when I started this channel, for the first like 3 months of this channel, I performed like amazing. Like for the first 3 months of like the live stream, it was like some of my best trading ever. And then the whole summer I didn't win a single day. You know? And I see plenty of people out there that they had the degree of success that I had for like that 3 month period, and then they consider themselves the expert forever. You know, and when you've been through all of that and you look at what they're actually doing and everything, you realize it's just random and they got lucky once, and they're not sophisticated enough to see it. That or they're too prideful to admit it. What's your view on market profile combining with them? So I have a video where I talk about the volume profile. So I would go watch that video. It's one of the more recent ones. And I actually show you some backtests with volume profile. And so the issue that you get, again, is that once you're starting to involve, especially level 2, so volume profile isn't quite as bad because you do get volume at price data. But you know, it's a harder to backtest, essentially. So you don't see as many people actually like going in and trying to sort it out. So I made a video where I backtested that. In particular, like these setups that are like trade to the previous day's point of control or things like that, right? And they don't work. The strategies don't work. So, you know, could there be some edge that you can pull from the DOM? Potentially. But I have not seen a systematic system that shows me results that suggest that it's actually effective. I also think that, you know, okay, if the point of control were likely to touch the previous day's point of control. Well, yeah, but only because of volatility. Doesn't mean that it makes a great target or a great place for a trade entry or anything like that, right? I think that the DOM is a really important tool because that's the only way that you can actually see what's really actually going on. So I think it'd be very difficult to be successful on trading short time frames without at least watching the DOM, right? Would those volume profile benefit? You know, wait, find me a setup that actually works, and then we can actually say for sure that it does, right? There are some things about volume profile I talk about in the video that are like, you know, seems like that they're not like imagining things. They're not imagining things. It's just they don't completely understand the full nature of the market. But I won't get into that. I'll let you watch the video and see the evidence that I present, and you can decide for yourself. But I think that there are some flaws in auction theory that you have to contend with. Excuse me. Sounds familiar. I did awesome on oil my first month. Now not some. Oh yeah, dude. The oil is the worst at that sort of shit too, right? If you trade oil long enough, I tell you, you're gonna have a period of trading where you think you're God. Like you will just win every trade, and you're doing so amazing. Oil is the crazy ex-girlfriend like that. She will gaslight the F out of you and then milk you dry. It's just, ugh. I ranted about a ton of things today, Jiwi, didn't I? But we got to oil was when it was like really like a real rant, right? Really got passionate about it. I think there's this really weird dichotomy with content online where it seems like that intentionally talking about controversial and even kind of nasty things can help elevate your profile. But it's also like talking about certain things will just get you completely, right? It seems like that controversially only helps you if you're already a really big creator and have a lot of people watching. What's your New Year's resolution regarding trading in markets overall? Well, I think that my focus right now, I wouldn't call it a New Year's resolution, but my focus right now is on trying to develop higher time frame strategies and information. Trying to model how CTAs might behave. Trying to model strategies that could actually be used to create a fund. And if we get something, actually try starting a fund. So we're going to get our Series 3 here. Might get the Series 31 so we can do managed futures instead of just a commodities trading pool. I don't know all the details about that. I guess I'd learn when I take the Series 31. But that's what I'm studying right now. And I have like 2, maybe 3 videos I want to make, but we'll see. Kind of going through like a lack of motivation, you know, like, this video is going to suck. This, you know, nothing special about this one. This one will be too controversial. I just shouldn't make it, you know. But I'm going to make it because I don't know what else to do. Yeah, like Dave Chappelle. I have not watched his latest special, but I saw the clip from the very beginning and I was so like, it was pretty brazen, man. It was a pretty brazen way to open that thing. I was a little surprised. You gonna start your programming journey with C? Ugh. Learning in C is like learning to drive with a stick instead of an automatic. I think that if you're really serious about learning how to program, that you have to start with a C language. But I wouldn't necessarily start with C itself. So why do I say that? The problem with C is you have to do memory management. And memory management is complicated. You have to write sophisticated algorithms to manage memory sometimes, and so you're really adding a lot of learning curve to it. Okay, but there's a bunch of languages that are basically C with memory management, right? That's basically what Java and C# and they use the same syntax as C. So I still feel I did see my first year of uni, and it's just crazy when I switched to Python. Yeah. Well, and that's the other thing is it really depends on what are you going to do with it, right? Okay. If you want to be a software engineer, you want to understand C syntax for sure, right? That's the place. But if you're only doing trading stuff and you want to do quant work, just learn Python. Just do Python. Like if you're just going to be doing quant and back testing, do Python. Figure it all out in Python and learn how to switch it into C++ later. Or Rust. That's the other thing. If I was going to go let's say that my objective was to become a software developer of some sort. Okay. And I was going to learn. And I had also made the decision that I'm going to take the high learning curve route. Going to do something that's hard, right? I would learn Rust because you're going to get paid better if you do Rust. You have more fun and you get paid better if you learn Rust. You work in the fraud industry? They might be using C++. I don't know. I don't know if they're using too much of Python there or not. What about neural networks? What language is best for that? Python. So we're you know, it's not going to be like this forever. We're in a really strange spot where, for some reason, all of the best libraries and ecosystems. So here's something that you got to understand. The most popular languages are usually popular because of the ecosystem built around them rather than the strength of the language itself. If it was all down to the strength of the language itself, we would all be using Golang and Rust right now. Machine learning, I don't think is really very well suited to Python. Right? But the ecosystem is all in Python. The machine learning quantitative analysis framework, it's all in Python. So the same thing with JavaScript. Like, people make freaking servers out of JavaScript now because of Node. Was not designed for that. It's like the least efficient way of doing a server. But it's got the ecosystem, and NPM is really great, and so they all do it in JavaScript. Yeah, Rust pays better than Python. So I haven't ever looked at this. There's Stack Overflow. You're probably familiar with that because that's where basically all technical questions go to Stack Overflow, right? And they do a survey of developers. And you can come in and you can look at this and you can see what are they actually making, right? So, I don't know if you can change it to your country. You might be able to. Salary and experience by developer type. So look at this, okay? This is a great one. Let me make it a little bit wider. Okay, so experience versus how much you get paid. So the further higher above this you're getting, basically you're making more money for less effort, right? So like the one that you do because you love it, right, is the database thing, right? That's the one you've been in that forever. But it doesn't pay as well as other ones. So what is the real standout in terms of like doing stuff, right? Well, okay, manager and seniors, they make the most, right? Marketing. Okay. And then what? SRE, that's what I do. So if you want the best bang for your buck, SRE. That's the sort of insights that you can gain from this one. Okay, so salary and experience by language. Okay. So what are the ones that stand out over here? Is basically this area, right? There's a bunch of languages here where you don't even need, less than 10 years experience and you're getting paid over 100K. So the big one right now is Zig. That one is probably a statistical outlier. Zig and ER Lang. I don't even know. Do that many people use these Closure? Okay, but there are some other ones in here. Go, Rust, right? But I'm only, that's why I was saying one of the caveats that I put in there is like, you want the high learning curve to begin with, right? Rust is an advanced systems language that is very new and fun to develop with and pays really well right out the gate. There aren't as many jobs for Rust, but they pay well right out the gate. Now, if you come back up here, they also have these like, okay, top paying technologies. There you go. Here's Go. Here's Rust. Hey, where's Python? Python's probably way down here, 78. Python is more average. But they also have this, what is it? Admired and desired. Okay. Desired, admired. And there's this one that is admired by pretty much everybody. Almost 85%. Clear outlier across the board. Which one is it? It's Rust. Right? So that's why I say Rust. Rust is the one that like everybody wishes they were doing, but they're not. It's for systems programming. Smart enough? Well, I mean, if you were going to do C, then you should be able to handle Rust. Is order flow the best way to trade? I would get away from the word best, right? There's lots of different ways to trade. I think it'll be very difficult for you to have a whole lot of success on short time frames in general, but especially if you are not watching the order flow. You're going to miss a lot. You're going to miss a lot, right? Yeah, if you're not smart, just do Python. Because a lot of what Python is, find somebody else's code and slap it in there. Like everything is just like they've done all the hard work for you. It's all abstracted. The complexity is already abstracted away. You don't have to do anything complicated. Yeah. Talk to you later, Lucas. See you tomorrow. Well, have they finally? Well, they've they not the first time they've touched 11, but that's the first time that I think I've gotten like a solid settling there. So we'll see if they go further, though. So far, I'm pretty happy with my decisions to have not taken the live trade here. I really should have caught something off of that, that news, but I should have taken it off afterwards. I'd be really upset if I was trying to hold it the whole time, right? And see it come all the way back, basically. Tips for beginners. Okay, so what I would recommend, the thing that is really hard for trading is, there's stuff everywhere, and like, where do you focus? Where do you go? What you have to understand is that trading is like developing a skill. It's like, I want to learn how to play basketball, right? How do you approach playing basketball? Well, part of it is you have to play basketball, and there's skills that you might focus on, right? Like, first thing that you should probably learn to do if you're going to play basketball is learn how to dribble the ball, right? So and learning to dribble the ball will be like somebody explaining it to you, and then you actually doing it, right? So I have some content on this channel that can kind of guide you through that process. What we're doing is we're developing your brain. We're developing a neural network in your brain that will help you interpret what's going on. So the way that we do that is, first, have an order flow video series. If you understand the order flow and the things in that order flow video series, you will understand so much more about the market. You have a huge leg up on like 90% of retail traders because they don't understand how limit order book works, the kind of emergent properties that come about as a result of that, and all of those sorts of things, right? So you use that to get your like general understanding of the market, and then you're going to come in and you're going to actually watch the market. So that means watching the order flow, listening to the news squawk. When you're not trading, doing a lot of research. Go to Zero Hedge is probably the best place for this sort of stuff. Any kind of story that they have about a prominent market analyst from like Goldman Sachs, Nomura, JP Morgan, etc., read those and read the analyst reports. And so now you're combining what you know about the market, the news and the analyst reports, what you know about the order flow, and you're watching it happen, and you're using what you know about the empirically proven behaviors of markets as a little bit of a guide to kind of help you be more likely for that neural network to develop properly into something that can trade effectively, right? And you're coming in and you're doing that every day, and after a few years, you'll get a pretty good idea of what's going on, and then you get to the point where, I don't think about it because the network just spits the answer out. I don't even completely understand how I come to those conclusions, but it just does it, right? So that's kind of the approach that you have to take for if you're going to trade, if you're going to day trade, rather, right? You could swing trade, could be completely different thing, right? You can use completely different strategies. So. Oh, dude, thanks for the tip. You have to do that. I appreciate it, dude. I've worked really hard to make the content on the channel, and I really think that it gives you a really good path. I wish I had a better way to maybe I need to make a video just explaining that. Make a video that's how to learn day trading or something like that. How much time do we got left? 15 minutes? Well, it's been more than long enough. They could have been making another move. I don't think that is going to do it. I'm thinking that the move that we saw here in the treasuries, at least, was largely because of the PMIs. And the equity market is not moved that far in the session. I have to see how much they claw back. You probably will see a rally in the late afternoon. That if we're down, they try and rally. That's just the way it goes, right? You watched 6 hours last night. Wow. I'm really proud of the VODs that I have. They're all really good. So some of them were kind of specific to what was going on at the time and stuff like that. But the ones that I've put in the playlists and stuff, I look back and I'm like, dang, Seth, how are you so good? So stop. Yeah, I wouldn't pay for Discord. You go into the video description. We have a free Discord. It's the largest futures focused Discord out there. The first two. We were doing Discord before anybody was using it for a trading room. I honestly think that a lot of these guys, they got the idea from me. But we have a free one, and we just kind of discuss what we see is happening then, news that's going through, stuff like that. Probably still be a little quiet for the next week or so. And then it kind of starts to heat up a little bit. Can I pay to meet? You don't need to do that. Because we are going to be leaving here in 10 minutes. So I would recommend trying to come in, when we start, which is around 8:30 Eastern time, right? But the thing that's nice about the setup that we got here, we have a very, very consistent, dedicated group of traders. Everybody kind of knows what's going on. And that gives me the ability to focus in on a discussion with one person when it's appropriate. So if you have questions, wouldn't shy away from it. We will answer it right then and there. All you got to do is ask it in the chat. You don't need to pay me for it or anything like that. Maybe someday I am kind of working towards getting the CTA, and then I could do advisory services like that. But I think that the services that I would be doing more is kind of like, oh, I'm actually a farmer. I want to hedge my crop. How do I go about, that sort of thing. Yeah, advice specific to you and your circumstances, I guess is what I would mean. I wouldn't be charging somebody unless I was giving advisory services that were very specific to a person and their circumstances. Yeah. But I have to set the company up and everything. How doesn't they come up with a name? But a lot of people, they do this whole thing where it's like they have a course and then you can pay for them to mentor you and that sort of a thing. And I could do that. To do that and for it to make sense, you got to charge people like thousands of dollars. I could do it. I honestly, I don't think that would be the most beneficial, thing for most people, nor like the best use of my time, right? Like, I think that if I have extra time, I should be using it to be developing strategies and build like a managed futures business or something like that, right? I kind of look at this as more of a collaborative thing, right? Like, I want to get you to a certain point so that you are to the point where you can contribute back, right? That's the goal. I'll stick around for 5 minutes more. They're building a pretty deep liquidity hole at 11, though. Should I scratch? Well, I don't know. What did you get? Let me say this. The market is very, very competitive. So the chances of you finding a systematic strategy with clear entries and exits that is going to be consistently profitable for you on a single instrument are pretty low, right? What we're doing is we're incorporating a lot of different information, and it's information that's different every day, right? And so I can't just give you like this one plan that like lays it all out. And a lot of it is experience. Okay. So if you buy a strategy from somebody, and it's like entries and exits sort of a thing, I'm not going to say that it was like a waste of money, but I would take it with a grain of salt, right? Because those tend not to work just because of the competitive nature of the market. Maybe you learn something from them, maybe you don't. But what I have on the videos on my channel in that order flow video series is real scientifically backed information about stylized behaviors of markets that are caused by market microstructure and that you will see in the order flow. Real things that happen, right? And I don't see anybody else talking about these things. So I really do believe that I have some content that is head and shoulders above what everybody else gives. And I didn't come up with this stuff. This is just stuff from like peer-reviewed research studies, right? So trading is implicit. Well, I'm not saying it has to be, but what I am recommending is yes, if you're going to day trade, because the market washes away statistical mechanical strategies on an intraday basis very, very easily. So essentially we're going for edges that the robots can't really do, right? But, like we were talking about earlier, there's lots of people that they'll have 1 month of success and then they're the expert. If you're going to do this, you kind of have to have the understanding that it's what we're trying to do is very difficult, if not impossible. Right? Like I hate it when I have kids come in and they're like, "Oh, I'm 19. I want to day trade for a living." No. Don't do it, kid. Don't do it. Make it a hobby. Go get a consistent way of making money. Trading can be fun, but it's really hard to compete with the robots on day trading, right? Okay, that ding was my cue to leave. Go to the day job. But I will be back tomorrow, 8:30 Eastern time. Thank you guys. Good stream. Interesting action for the first day of the year. We're going to have a wild year, I think, with the election and the whole situation the Federal Reserve has set up and the economy appearing to weaken. Could get super, super wild. Oh, man, you don't have to do that. I appreciate it, though. Well, okay, guys. Is that the third one? Did it say the third super message on a live stream? That's so cool. Thank you, guys. I do have to go, though. I will see you tomorrow. Stay